Says which of the following is true. Financial statements gives the summary of accounts, or the financial statements can be stated as recorded facts. Only one, only two, both one and two, or none of the above. According to you, what's going to be the answer, everyone? Is it only one? Is it only two? Or both? Chali, let's look at the answer there. If you look at this specific area, the answer is both are true, right? Financial statements gives a summary of accounts, it's true. It gives a summary of the entire accounts. Secondly, when we talk about this specific area, it also talks about the financial statements that can be stated as recorded facts. So in this case, the correct answer is both 1 and 2. Premium received on issue of shares cannot be utilized for the issue of bonus shares, for writing the preliminary expenses, for providing premium payable on redemption, or for distribution of dividend. Premium on issue is security premium, everyone. When we talk about the security premium, where can we, there's a place specific area na, where we cannot use it at all. So what's that specific area altogether? Premium received on issue of shares. It cannot be utilized for issue of bonus. It can be used for preliminary expenses. It can be used, right? It cannot be used for distribution of dividend. You cannot use it to distribute dividend. You can use it everywhere else. It is allowed to be used. Okay? Chaliye, next question, everyone. Fixed deposits appear in the balance sheet under current account, current liabilities, long-term provisions, or long-term borrowing. Everyone, please remember, in this case, this is company, not a banking company. I know for a banking company, FDs are always, FDs are, for them it is always a liability because they have to pay now. People have deposited money into their account. So people have given money to them. So in this case, what will happen? The correct answer would be long-term borrowing. Right? Fixed deposits appear in the balance sheet as long-term borrowing. Done? Chali. Next question, everyone. Dash appear in the company's balance sheet under the subhead short-term provision. Interest accrued but not due on borrowings, provision for tax or unpaid dividend, or calls in advance. Dash appears in the company's balance sheet under the subhead of provision. Provision is basically a certain amount of money that you have to pay in the upcoming future, and even you know the exact amounts even. So provision can be stated as provision for income tax. Income tax is covered in this area because we pay tax according to the current prevailing interest rates, which are tax rates which are going on for a company. It is normally 30%. For certain companies it is actually 25%, and for a certain amount of companies it is an exceptional rate of 22 as well. So this is the interest rates for the companies. Then, which of the following item is shown under the head current assets while preparing the balance sheet, everyone? Trade investments, underwriting commission, inventories, or the livestock? What's going to be the answer according to you? Which of the following can be stated as this? Trade investments, current assets are basically the investments which you have gained in your business. है ना? In this case, what will we do? When we talk about the specific area of current assets are those assets which we use in the business, isn't it? We use specific things in the business. So what do we do in this case, everyone? In this case, the correct answer is inventories. Okay? Current assets are those assets which are used in the business. So, the correct answer is inventories. Inventories matlab the goods that we are supposed to sell. Everyone, if you haven't subscribed to our channel yet, then please subscribe to our channel right away, because it is super important that we are dealing with the specific topics from the best areas. So why don't you check out our courses right away on our app, and at the same time, if you haven't subscribed to our channel, then go ahead and subscribe it as well, as all the offers and everything that we do in our regular courses is stated there. है ना? So everybody, let's continue and talk about the next part. Acha, share capital of a company consists of 5 lakh shares of rupees 10 each. Acha, theek hai. 8 called up. We haven't called the entire amount, everyone. We have called hardly 8 rupees. So if we have called 8 rupees, what are we going to do in this case? All the shareholders have duly paid the called amount. They have paid the amount. Share capital will be shown as subscribed and fully paid, subscribed but not fully paid, any of the above or none of the above. People have taken up the shares, but obviously we haven't asked them to pay the entire amount yet, isn't it? So if we haven't asked them to pay the entire amount yet, so what's going to be the answer in this case? Subscribed but not fully paid. Done? Let's talk about the next part. Which of the following purpose is served from the preparation of trial balance? Everyone? Which of the following purpose serves the trial balance? Trial balance is basically what? Trial balance is actually a statement. This is actually a statement to check the arithmetical accuracy or to ascertain the balance of the ledger, to facilitate the preparation of the final accounts promptly, or all of the above. What's going to be the answer? The answer to this question is going to be all of the above. Basically, it is just done as a conclusive proof of arithmetical accuracy, and this is where it ends. Other than arithmetical accuracy, it can never say things are going to happen in this manner or that manner. It just gives only and only one view. Done, everyone? For which of the following share premium account may be applied? Where do we apply the share premium account, everyone? Which of the following share premium account may be applied? Issue of fully paid bonus shares, writing off the preliminary expenses, writing off the expenses of commission, matlab the fictitious assets. Or all of the above. The correct answer is all of the above. Done. Next question. At present, a company can issue the preference shares for which are irredeemable, number one, they are redeemable after the year of 20 years of date of issue, or before 20 years or 25 years. As per infrastructure companies, it can be redeemed by maximum 30 years. For infrastructure companies, for normal company, the limit is by maximum 20 years you have to get it done. That's a specific rule, everyone. Done. Basically, preference shares are always redeemable. Matlab you have to pay within a specific time tenure. They are never there for the entire day in the business. Nobody is in the entire day, entire life of the business actually. Nothing's gonna be there in the business for the entire life of the business. Everything has a specific life altogether. Done, everyone? The answer is 20 years. When shares are allotted, they will be credited to which account? When we are giving shares, that means 30%, 90% of the shares have been subscribed by someone. These are share capital account. Then next point is share allotment account, share application account, or share first and final account. Everyone, what's going to be the answer according to you? Shares, when shares are allotted, ultimately when people are, first of all, people get the shares. Matlab, first of all, whatever money we receive now, it goes into the bank. Once that money goes into the bank account, then what happens? If it's a bank account, what's gonna happen? Share capital, share allotment, share application, or share first and final call? The correct answer is share capital account. The entire money gets into the specific area of share capital account. Done, everyone? That's the answer. Profit on forfeiture and reissue of the equity is credited to dividend equalization reserve, or general reserve, or capital reserve, or security premium. The correct answer to this question is actually capital reserve. The extra money, everything is used in the capital reserve. Done, everyone? It's an important area altogether. Okay, now let's move on to the next question. Premium on redemption of redeemable preference shares. When you are paying off the preference shares and it is redeemable in nature, it goes into the capital redemption reserve account, existing share premium account, or proceed to fresh issue of the shares, or all of the above. Premium on redemption of redeemable preference shares. In our country we can only issue redeemable preference shares, so it can be paid off out of existing share premium. Share premium account can be used to pay off new share premium. ठीक है? Done, everybody? Okay, everyone. Done. Last question. Contingent liabilities would appear where? Contingent liabilities are those liabilities which we haven't really fixed up that we are supposed to pay, right? This amount is something that we haven't decided. It is still very much uncertain. So what do we do? So on the liability side of the balance sheet, asset side of the balance sheet, remember only the certain things are there in the balance sheet. Then it should be a part of your as an as a note in the balance sheet, as a footnote rather. Okay, so this would be covered as, it would be shown as the note in the balance sheet. Then there comes the first question. When a company issues at a premium, amount of premium may be received by the company, है ना? Along with application money, along with actually it should be allotment, along with calls, along with any of the above. What's going to be the answer? So in this case, the correct answer is actually, no, it doesn't matter. Whenever you will specify, I have to pay at that point of time. है ना? If you specify that no, the amount should be given today, I'll give it today with application. If you say it should be given tomorrow, I'll be giving you with application money tomorrow, right? Reserved capital means what, everyone? What do you mean by the term reserve capital? पता है basic in a reserve capital is that part of the capital which we are keeping till the time of liquidation, that when we would genuinely need money, when there would be a dire need of money, then we will take this capital. That is why it is called the term reserve capital. So in this case, a part of the scheduled subscribed uncalled capital, you can say the amount is actually not called yet. Reserve profit is not the one. Then capital, part of capital reserve, no, it's not a part of capital reserve even, or it is not a part of any reserves altogether. This is that part of the capital which we are saving, that what if we would need money at the time of end of the company, then these people are the ones who would be contributing towards it. That's a part of subscribed. People have taken the capital, but we haven't asked them to pay yet. We would like to wait. If a share of rupees 10 on which 8 has been called up, 6 is paid, is forfeited. Everyone, I called up 8 rupees till now and 6 is paid. The share capital account should be debited with 8, 10, 6, 2. The rule says you will cancel only that part which you have actually called up. Till date, did we call the entire 10 rupees? If we would have called the entire 10 rupees, I would have said ki nahi, record the entire 10 rupees. So in this case, it is actually 8 minus 6. Matlab actually na, 8 was the called up amount and after 6 he paid nothing. We got irritated with the fact कि why is this person not paying? So we made sure that if he is not paying, then we would record it accordingly. है ना? That means whatever money they have actually paid till now is the one. But whatever we have called till now should be recorded. That means our reverse of the share capital should be done only and only of the amount which the particular company has made due. If that is not made due, then we won't record it. ठीक है ना? 8, 10, 6, 2. In this case, the answer is 8. Whatever we have called up is all we can actually cancel. If I didn't ask for the entire money, how can I ask them to cancel the entire amount? Whatever you cancel is whatever you book here. Whatever you cancel is what you book here. Next point. What is the maximum limit up to which the company can raise the capital as stated in the Memorandum of Association? Authorized capital, issued capital, subscribed capital, or called up capital. In the MOA, we will specify that the company can raise up to this much amount of capital only. When we say only this much amount of capital can be raised, that is what we are defining now. That the company can raise 10,000 or 20,000. This is the permission that we get from ROC. This is the maximum capital I would like to raise for my company. So in this case, what's going to be the answer? In this case, MOA, the maximum capital we are getting is authorized capital. Authorized capital is also called nominal, is also called registered. Done, everyone? Everybody sorted? Chaliye, let's look at the next question. Everyone, if you haven't downloaded our app yet, then hurry up and download the app because you get 1% extra discount if you download our app. So I think the best time is to download the app right away and get our courses at the lowest prices. That's one part that would be really helpful for you in your examination and your preparation because there are so many free content which we are providing to you. So that free content is something that you can use for your preparation in a better manner. Even though if you're preparing from some other platforms even, things really won't make a difference, right? Because you're getting good notes and then you're preparing through it. Acha everyone, this is a typical question. J Limited reissued 2000 shares which were forfeited by creating share forfeiture account by 3000. These shares were reissued at 9. Acha, the share forfeiture account we had written that 3000 rupees which were forfeited by creating. Matlab this is the amount they have already paid on the shares. 3000 rupees on these shares is already paid. The shares were reissued at rupees 9 per share. Acha everyone. 3000 was for 2000 shares. Okay. So can I say 3000 divided by 2000? That means per share we are having a forfeiture of 1.5. है ना? Ideally, I was supposed to receive 2000 multiplied by 10. The share price was 20,000, which were forfeited by creating the share forfeiture. In this case, 3000 was the amount according to them was already paid. So we are not going to recover. We can maximum issue it at 17,000 or higher than this, minimum 17. And we have issued it at 2000 into 9. That means we have issued it at 18,000. That means we didn't use the entire 3000 rupees. I could have given this particular share on credit, pata. I could have given discount on the share, but it didn't given even the single penny. Technically, in this case, the difference is of अच्छा नहीं ठीक है one more thing if 1 rupee is the discount. You have given the share of rupees 10 at rupees 9 now. Then there's one more point. Acha, let me just simplify it further for you. It becomes too much cumbersome. Everyone, I was supposed to receive 20,000 into 10. Sorry, 2,000 into 10. I was supposed to receive 20,000. Share forfeiture matlab 3,000 is the amount the person has already paid. So he could pay 70, then other person can pay minimum 17 and can pay more than that as well. है ना? Now the next point is we issued these shares at 2,000 into 9, 18,000. That means if I have got 3,000 from the previous shareholder, I have got 3,000 from the previous shareholder, everyone, but from the current shareholder I gave a discount of 2,000. So can I reduce this? 3,000 discount I could give. I gave a discount of mere 2,000. So ठीक है ना, 1,000 is the discount which we still have. That would be covered in capital reserve. See Ara? So the answer is 1,000. Next point, everyone. Which party is responsible for nothing on or for noting of dishonor of bills of exchange? Acha, this one particular question is there. It says that drawer, drawee, notary public, or pay. Whenever the bills of exchange is dishonored, then you have to go to the ultimate area of notary public and get it done. Ki pata hai, this has happened. The person is not paying us. It's hurting us badly. So we are getting it acknowledged from you. Done. Amount of calls in arrears. Calls in arrears means the amount that you were supposed to pay. Amount of calls in arrears. Calls in arrears means the amount that we are yet to receive. This is an asset. Added to the capital, deducted from the capital, shown from the asset side, or shown on the equity and liability. See, this is the money that we are supposed to receive from someone. If we are going to receive this money from someone, then this is deducted from the share capital because we thought that we have received the money but we haven't received it yet. है ना? Done, everyone? Next question. Shares can be forfeited, but when? For failure to attend meetings, for non-payment of call money, for failure to repay the loan, or for which shares are pledged as security. Done? Shares are forfeited, that means a person was supposed to pay and he didn't pay. So if he doesn't pay at all, then when he doesn't pay at all, then we will seize his amount which he has paid already. That is called forfeiture. Forfeiture means the money that the person has already paid and we are denying. Why did he pay now? We said if he has paid, then no, we are not giving it back to them. We are obviously irritated with the fact that he was supposed to pay but he didn't pay. That's for the non-payment of call money. If he was supposed to pay a call and he didn't pay the call, that is to be covered here. Done, everyone? Chaliye. Last question. According to Section 52 of the Companies Act 2013, the amount of security premium cannot be used for the purpose. I've told this particular question so many times in different classes. Please make sure that when you are dealing with company accounts, always remember where can be security premium used and where it cannot be. Issue of fully paid bonus shares, writing off losses of the company, writing off preliminary expenses, or writing off commission or discount on the issue of shares. It can be used for preliminary expenses, can be used for discounted. So I think the answer is going to be B. It can be used for issuing the bonus shares as well. So in this case, the correct answer is writing off of the losses of the company. It's an instrument. Negotiable instrument. If I want to sell something to you, then it can be sold through the bills of exchange. That means if I have to pay you something, then how can I pay you? The best way to pay you is that if I'm not able to pay, I'm not able to give you cash, then I'll give you the instrument which you can recover your money from somewhere else. Okay, for example, I was supposed to get cash from Mr. R, and I told Mr. R that I'll be paying you soon. Okay, so then I got a bill receipt. Okay, let's talk about Mr. R, Mr. S, and the last one is Mr. T if required. First of all, if I talk about Mr. R and Mr. S, what are these two people doing? This person is supposed to receive money from this person. For S, this is a bills payable. For R, this is a bills receivable. And R will receive the money after a certain period of time. Say he will receive money after 3 months. Say, okay, if the bill is for 3 months by time period, this is for 3 months. If the bill is for 3 months only, then what will we do? The bill is issued. So once the bill is issued, the best thing is that we can actually take care of the bill of exchange in a certain manner, where R will go to S and ask him that 3 months are over, now give me the money. S will give him the money after 3 months and the bill of exchange is complete. In case R has to pay money to someone else and he says, Acha, I am selling this bill to T only. Now T will take care of it. That means now I don't have to pay. Right? Done? Done? Chaliye. Now in this case, he is the drawer who draws the bill. He is a drawee. And if he gives the bill to somewhere else, he's called pay. Done? So let's begin with the session, everyone. Further. The first question says, which of the following is not mentioned as a common instrument of credit? Check, bills of exchange, promissory notes, or stock or bonds. As per the Negotiable Instrument Act 1881, how do we look forward to it? In this case, checks are there. Okay, check is an instrument. Bills of exchange is also an instrument. And promissory note is also an instrument. What is not an instrument is stock and bonds. These are assets. Done? So stock and bond is not an asset. चलिए next point. What is the main characteristics of a bills of exchange? It is a verbal agreement between the parties? No. If it would have been a verbal agreement, it won't work good. You know? It is signed by the drawer and the pay. Drawer is the one which issues the amount and the one who receives it. It contains an unconditional order to pay a certain sum of money. And the last is it can only be used for immediate payments. It's actually written form number 1. And you say it directly that this is an order. And that too on condition. There's no specific condition to pay a certain sum of money to certain someone. So in this case, the correct answer is actually C. Okay? This is not a conditional order. This is an unconditional order. Let's go ahead. Thank you so much. Chaliye, further. Who is the drawer in the bills of exchange, everyone? The person who receives the money, the person who is ordered to pay, the person who draws the bill, or the person who witnesses the transaction. The one who's supposed to receive the bill receivable is known as drawer. And the one who is supposed to pay, for him, he's the drawee. Done, everyone? The person who draws up the bill, and for him it is an asset. For him it is an asset. Done? What does the specific promissory note, how does the promissory note differ from bills of exchange? One is an order, one is a promise. That's one of the basic things. One is an order. What's an order? Bill receivable is an order. Under bill receivable, I will agree that I order you to pay this much amount of money after this much amount of time. Done? A promissory note involves 2 parties, while a bill of exchange involves 3. Actually, this is also true. A promissory note requires a signature of the payee, the bill exchange does not. A promissory note can be used for immediate payments, both are same, both are short term. A promissory note is payable on demand and the bill of exchange is for a specific period. The answer is A. In terms of bills of exchange, we have drawer and bills payable. This is bills receivable. This is drawee. And if he provides it to someone else, okay, you recover the funds, I am giving the particular bills of exchange the right to receive money to you. Now this is pay. And he is actually the payer. The second option is promissory note. Promissory note, we have 2 things. sir and promisee. The one who promises that he will pay. Now he is the one who is going to pay. He is the payer. And promisee, the one who is receiving the particular promise there, he's the payee. Done, everyone? Next question. What is the primary function of promissory note? To facilitate trade between countries, to provide evidence of circulate transaction, to regulate interest rates, or to serve a legal document. Primary function of promissory note is simple. It's just a promise. Okay, we'll make the payment after a certain period of time. है ना? Done? Chaliye, next question. Everyone, if you haven't taken up our course yet, then you should definitely take up our courses. For that, the best thing is to download our app. Because till the time you don't download the app, things really won't work out for you, as you get 1% extra if you download the app. So go ahead and check it out. Next point. What is the primary difference between a bills of exchange and a promissory note? A bills of exchange is signed by the debtor, promissory note is signed by the creditor. Or a bill of exchange is basically an unconditional order to pay, promissory note is a conditional, unconditional, and both are unconditional in this case. Bills of exchange requires acceptance and promissory note does not. There are two parties that involves race. The point is still similar. The answer is bills of exchange is an unconditional order while promissory note is an unconditional order. No. The answer is the D point. In this case, we can, if I have to correct it, it can be like bills of exchange is an unconditional order to pay to the drawer, while a promissory note is a promise to pay to the promisee. Is supposed to make the payment to the promisee. Which party is responsible for noting on dishonor? If there's a dishonor, who will record it, everyone? Hanji, which party is responsible for noting on dishonor? Dishonor means one the party was supposed to pay and they didn't pay. If a person doesn't pay, then who will note it out? Drawer, drawing, notary public, or pay? It is notary public. He records it. Whoever is supposed to pay, he will record it. Last point. What must a check fulfill in terms of its payment? It must be payable on demand. It must be payable after a fixed future date. It must be payable only to bearer. It may be payable only to the order of the drawer. In this case, it must be payable on demand. When the person who has issued the check will take care of it, then she can take care of it. Now, let's move on and talk about the question. How is bills of exchange different from that of check? Check is payable on demand. Once a check is issued, then the person has the right to get the check done. Na? है ना? Once that particular person gets the check, he would be in a better situation. Why? Because in that case, he can take out the money. So this will be really helpful for the person that he can have a check. Check is basically a right that you are giving to the other person to withdraw the money from your bank account. A check requires acceptance, bill does not. No, bill requires check acceptance. Then the next part is a check is always payable on demand, while the bills of exchange can have a specific date only. Then a check must be stamped, while the bills of exchange does not require any stamping. Or a check can only be drawn upon a bank, while a bill of exchange can be drawn any person. I think the correct answer is bills of exchange can be drawn on any person. Bills of exchange do not have any specification there. ठीक है? While bills of exchange can be for a specific period of time, validity for a bills of exchange can be for 3 months, 6 months, whatever you think about. While in terms of cash, your check is issued by the bank only. You know, but that is actually on my behalf. I have a bank account. So if I have a bank account, then it would be based upon my bank account only. You know, that is what I was talking about. So let's move on to the next point, everyone. Who's the holder in due course? What is a holder in due course of a negotiable instrument? Achha, everyone, I got a particular, I am the drawer. I drew a check in the name of Mr. So-and-so. Okay. Then if I withdrew the bill on his name, I can recover the money from him at any point of time. What if I transfer this right to someone else? I am doing nothing, everyone. I am just transferring the right. That means the person to whom I've given the bill during the period, it is not to be recovered. It is called holder in due course. So that is why it is called holder in due course. The one who's holding the bill within the time period when it is the bill has not expired. Someone who obtained the instrument without consideration, someone who acquired the instrument after its maturity, someone who had cause to believe in defects, or someone who obtained the instrument for valuable consideration. Basically, na, I must have been faltered in some payments or something where he would have said कि नहीं यार ma'am, you need to give me the money, है ना? So I said, okay, I don't have the money right now. Is it possible I can pay you through? Can I pay you through the specific area of only and only the rights that I have possessed right now? So if I have the rights, then I can use those rights. So in this case, the correct answer is actually someone who has obtained the bill because I have exchanged it. Because of my inability to pay, I will be dealing it in this manner. ठीक है? चलिए. Now let's move on to the next question. Next question says, what happens when a bill of exchange is dishonored? The bill becomes void. The drawer must pay the amount immediately. The drawee is unable to refuse the payment. The bill is said to be dishonored and the holder may take legal action against the drawer and the endorsers. Okay, this sounds very, very difficult now. Dishonor means the person was supposed to pay and he said, I cannot pay you. That means he didn't honor the bill. You know, that's the entire thing. When he's supposed to pay, he didn't pay. Right? चलिए then. What do we do in this case? The bill becomes void? No, once the person refuses the payment, then you can take legal action. If someone who is supposed to pay you doesn't pay, so what will you do? You will not sit idle, na? You will have to ask the particular person to pay you the money. And if he's not paying, then you have to tell that particular person to pay you. चलिए. What's the correct answer there? The correct answer is the bill is said to be dishonored. And the holder can take action. And you have to go to the notary as well, everyone. Notary means you have to go to the notary for this. Notary basically is the person who is the who's at the court and he acknowledges it that you are supposed to pay to someone. ठीक है जी? So what's gonna be the answer in this case? Simple. The answer in this case is actually related to the once you are supposed to pay to someone, that is called notary public, who gets it noted that someone was supposed to pay you and he has not paid. So for that you pay notary charges. Notary charges. Done? चलिए. Next point, what is the characteristic that must a check share with the bills of exchange? Both are negotiable instruments. There's one particular point. Both are under Negotiable Instrument Act 1881. It's a very old act. It must be payable on demand. Then it must involve acceptance by a debtor. It must be signed by the drawer and the payee. It must involve noting on dishonor by the notary public. Notary public involvement is not here. The answer is it must be payable on demand. Done, everyone? Okay, everyone, if you haven't subscribed to our channel yet, then hurry up and subscribe to our channel right away, because every single moment that we're dealing with the topics there, we're coming up with more and more classes. So every single class that we are coming up is equally important, and we are covering a lot of important topics with you. So when you are missing out on the classes, then there's a problem, because then you might lose on something important. So it's very, very important that you remain in the classes, and please keep on downloading the particular content as well, so that you can have it for your future preference. है ना? चलिए. Now let's move on and talk about the next topic. The answer related to this question: B has accepted a bill drawn on him by A. There are two persons, B and A. B has accepted a bill drawn on him by A. Matlab A is the drawer and B is the drawee. In this case, he has drawn the bill, so this is a bill receivable for A and bills payable for B. Then from B to A, this is the bills receivable, this is a right to receive, and he has to make the payment. So A can endorse the bill, B cannot endorse the bill, A can endorse the bill, then B cannot, or B can endorse the bill. Technically, who's supposed to pay? Simple. Who's supposed to pay? The person who's supposed to pay is B. B is the one who's supposed to pay. So in this case, he doesn't have a choice at all. Done, everyone? So in this case, A has no right. B has definitely got all the rights. So in this case, the answer is A. That is, A can endorse the bill because this is his payment that he's supposed to receive. Na? A has all the rights. B has no rights. Done? So in this case, the answer is A. Next point. The due date of the bills dated 1st of February 2023 for a period of 2 months shall be. Everyone, what should be the due date? When we talk about the due date, that means the time at which this bill become payable. है ना? The bill becomes payable after a certain period of time. If it is 1st of February, if the days would have been stated, then calculation is required in days. When it is in period of months, then it has to be calculated in months. So in this case, we are starting from 1st of February and we are going up to the month of February. The entire Feb is a month and entire March is also a month. That means some amount is supposed to be payable in April. And April 1 is where it is completed. You have to give 3 days grace. ठीक है? The answer should be, I'm sorry, it should be 4th of April. Adding up these days, na, the answer would come out to be 4th of April. The answer is A. Done? Chaliye then. That's it for the day. Acha, let's do the other question as well. Who is the drawer in the bills of exchange? The person who receives the money, the person who is ordered to pay the money, the person who draws the bill, or the person who witnesses. He is the person who says that you have to pay to me. That is the person who draws up the bill, is called drawer. Refusal to accept by the acceptor to pay the bill on the maturity date is called. If I refuse to pay, that is dishonor, retirement, rebate, or discounting. Rebate is giving discount, retirement means paying it before time, and even rebate is the same. Discounting of the bill is selling the bill to someone else. So this is dishonor. That is the answer. Chaliye, that's it for the day, everyone. We'll be meeting tomorrow. But before I end the session, everyone, I hope you have gone through our courses. If you haven't, then please check it out on our website or in our app for further details. What you need to do is you need to check it out on our website, that is www.adda247.com. As soon as you'll open this specific area, you will find the entire details. Okay, so what you need to do is, this is our and I am with you with the specific area of accounting and financial management for bankers. I hope I'm clearly audible. Let's begin with the session, everyone.
Hi friends.
Okay, so we are talking about the basics of accounting. Basics of accounting includes, these are the very basic level of questions in the examination. These are covered in terms of literally the basic level question. Basic level question means these kind of questions are from the beginners level, plus these kind of questions are asked in the examination a lot. Okay. So when we talk about the basics of basics of accounting, the first module is all about the basics, and the first module is asked a lot in the examination. From the area of half mark questions, 1 mark questions, this particular unit is asked a lot. Okay, so let's begin with the session, everyone. Before I proceed further, please like the session, share the session, and don't forget to subscribe to our channel if you haven't done it yet. Acha, before I proceed further, everyone, I hope you have reviewed our courses as well, because currently our courses are available at a very good discount and it is ending soon. So what you can do is check out our website. First of all, go to our website www.adda247.com. Go on to the area of JAIIB and CIIB. Go on to the area of JAIIB May 2024, and this is where you will find our JAIIB Mahapack 2.0. In the Mahapack 2.0, click on the area of buy now, use the code Y541 and apply it. You will get it for 6298.95. That means you can get it for 6,000 only. Okay? So you can get it for just 6,000 rupees if you are using our app. So 80% discount would be available to you. So please check it out on our website and our app for further details, everyone. ठीक है? चलिए, let's begin with the session. According to the concept of money measurement, the following will not be recording in the books of accounts: simplicity of general management, death of the general manager, gratuity paid to the manager's wife after his death. Money measurement concept. Money measurement concept means everything has to be recorded only if it records and it is related to money. If it is not related to money, then it will not be recorded. So in this case, the answer is simplicity of the general management. Simplicity is qualitative or quantitative? This is qualitative, right? So we cannot put it in terms of money. Then, because we're talking about will not be recorded. Then the next part is death of the manager. Then death of the manager is also something which will not affect us. right? So in this case, what would be the answer? Gratuity paid to the general managers is, this is a cash based thing. So the answer is A. That means first and second has to be considered. What will be the effect of if sales return is 50,000, posted 48,200, purchase return of 46,000 posted as 47,800? It's of no effect. P&L increase by 3600, P&L decrease by 3600, P&L decrease or increase by 1800. This is a question of rectification. What will be the effect if the return of 50,000? I returned, sales returned. People returned goods back to me for 50,000. Matlab my sales is getting lower by 50,000. But I recorded 48,200. That means my sale is right now overdone. है ना? I have shown my sales by rupees 1800 more. Purchase return is of 46,000, which is posted as 47,800. In this case, what is happening? Purchase is an expense. So purchase return reduces my expense. I reduced my expense more. I increased my income, I reduced my expenses further by 1800. So in this case, the impact is basically your P&L is increasing. You showed more income and you showed less expense, both by 1800 each. So in this case, the answer is your P&L will increase by total of 3600. Provision for bad debt is made as per what concept? Is it entity concept, conservatism concept, cost concept, or going concern concept? Provision for bad debt is made as per entity concept. Entity is basically business and businessman are different. Conservatism means prudence. Prudence means anticipate the losses but not profits. Cost concept talks about historical cost. Going concern talks about men may come and men may go, but the organization will continue for a longer period. So the answer is conservatism. Accounting standard AS10 deals with fixed assets, depreciation accounting, consolidated financial statements, or accounting for taxes on income. AS10. It deals with actually property, plant, and equipment. It was earlier called fixed assets, but its name has been changed to PPE. Depreciation at one point of time was AS6, which was removed and is a part of PPE now. Okay? The answer is A. This is also called property, plant, equipment. A purchase invoice is recorded on the purchase day book at 18,500 without taking account of 10% of that amount offered as trade discount. The purchase day book, that means it's a subsidy book in which we recorded it as 18,500, but we forgot to record that we got a discount of 10%. So this discount has to be removed. है ना? What's the answer? The answer is, in our books of accounts we have shown more of purchase, but it has to be less. But in this case, what do? You took it in this way. Acha, you also have to write what is the impact in the books of accounts, since it is an error of this is an error of original entry. That means our original entry was wrong. This kind of errors cannot be traced. So in this case, there would be no impact. Please download the app, everyone, if you haven't done it yet, because on our app you will find all our PDFs. Free PDFs means you don't really you get all the particular details of our YouTube sessions. The PDFs of our YouTube classes would be visible to you through this. So if you are planning, then hurry up and do not wait at all. Download the app, as from the app you can also get our courses at a very nominal price. Okay, you can get 1% discount, and currently the discount of 80% is going on. It can be really helpful to purchase, as 1% discount means in these courses you will get around 200 rupees. And if you're talking about Mahapack, you're getting a discount further. So I think every rupee saved is definitely an investment. So if you're planning that, do not wait at all, everyone. Hurry up and check out our website or app for further details. A sale invoice of 21,000 has been posted to the customer's account as 12,000. Acha, this is it's a very big mistake. Huh? Why is it a bigger mistake? I'm sorry. Sale invoice of 21,000. The invoice was of total 21,000 rupees. I made an income of 21,000, but I showed it at 12,000. That means my credit side is less. है ना? Less means it is undercast. Undercast means when we'll record it, it is excess credit of rupees 9,000. In this case, we will have to do the credit more. Yes, we have to do the credit more. The question says this only. We have to do more of credit. Done. A trader disposed of an old equipment with a book value of 3,500 for 3,900. In this case, he's obviously making a profit. And how do you define this profit, everyone? How would this transaction be treated by this books in the business? Acha, everyone, when I sold the asset, I'm obviously making a profit, or I'm facing a loss. If I'm making a profit, in this book value was 3,500, so I think I sold it at a profit of 400 rupees. You know, while the cost of it was rupees 3,500. So in this case, our profit is of 400. But overall, what we have got is totally the capital receipt. There is no revenue receipt, everyone. In this case, what we're having is a capital receipt of 3,500, and we made a profit of 400. So this is once you lose an asset, and the profit and loss are the same, will be revenue receipt. right? Let's go for the next question. The concerned account debited in the journal should be debit the ledger, um, but reference number should be respective credit account. No. Credit the ledger, but reference should be given to respective debit account. Credit the ledger and reference should be respective credit account. Debit the ledger and reference would be of respective debit account. In this case, the answer is debited in the ledger, but reference should be of the respective credit account. That means if you're looking at the credit side or the debit side of a journal, then the journal has to be recorded respectively. That means if it is a journal, then while recording it, make sure that the journal is recorded in certain way, that if it is of cash, say, okay, cash journal has to be recorded. I made some cash to capital. In the ledger of cash, you have this cash, so you write it here because it is on the debit side. Cash has to be noticed now. Who will testify cash is on the debit side? Someone has to tell that yes, I know that the cash was on the debit side. That was capital. So in this case, the reference is of credit side, but the general thing is of debit nature. Done, everyone? Unintentional omission. You didn't want to omit it, but you forgot about it. Or the commission of amounts. Or accounts in the process of recording transactions are known as frauds, misinterpretation, errors, or none of the above. What's going to be the answer? Frauds, misinterpretation, errors, or none of the above. Unintentional omissions are something that we forgot. We didn't want to forget it. This is an error overall. You know, this is not something error of omission, error of commission. They are all errors. These are unintentional mistakes that we make. In an effect of an error is cancelled by the effect of some other error. What are those called? Error of principle, compensating errors, error of omission, or error of commission. Error of principle, error of commission, error of omission. What's going to be the answer in this case? The answer is compensating errors. Compensating errors means the same error on the debit side and the same error on the credit side. That is why it gets cancelled altogether. Double column cash book records only cash balance, only all the transactions, cash and bank transactions, or cash purchase and credit purchase, cash sales purchase. Double column cash book, that is a form of subsidiary book which records purely the cash items. That means both the inflows and both the outflows. So it records only and only cash transactions? No, but this is double column. Double column means it has got two columns. So that means it can be having cash as well as bank balances. Okay? So answer is C. Done, everyone? Chaliye, the last question for the day. According to the provisions of RBI, the promissory note cannot be made payable to the bank, endorser, bearer, or none of the above. According to the provisions of RBI, promissory note cannot be made to the bearer. We are not allowed to do this. This is there only in currency note. I promise to pay to the bearer rupees 10 note, rupees 50 note, rupees 500 note. Okay? That rule is there only for them. Chaliye, that's it for the day, everyone. And if you're planning to purchase our courses, then please do it right away because the time is ticking. The costing methods. How do we define the costing methods, everyone? Here comes the question now. What does the penalty clause in the contract stipulate? Penalty clause. There's a penalty clause, indeed. If you're taking a lot of time, then this is what we'd be looking forward to now. Adjustment of the contract price, number one. Provision of security deposit, number two. Payment by the contractors for the delays, number three. Or payment by the customers for defects, number four. Everyone? Penalty clause in a contract. This is where the contractor makes some delays. So it has to be stated now. Ajay, everyone, which accounting standard records the principle for determining the profit on incomplete contracts? AS7 only, Ind AS 1115 only, or both AS7 and Ind AS 115, or none of the above? What's going to be the answer? Everyone, AS7, Ind AS 115, or both of these, or none? The answer is C. Both AS7 and Ind AS 115. The answer is this. These are the various accounting standards. 7 is for contract accounting, and when we talk about Ind AS 7, this is the same standard, but this is as per the Indian accounting standards, which were released recently. Recently means just a few years back, 4-5 years back. Everyone, next question. This looks like a So indirect labor cost is basically relates to wages that are directly engaged. Direct is direct labor. It is a cost of labor employed for tasks incidental to production. It can be conveniently allocated to a specific cost unit, or it depends directly on the volume of production or level of activity. Actually, indirect labor is based upon the production area. Matlab, if you produce more, you have more indirect cost as well. Indirect cost can be direct and indirect. Indirect cost can be variable as well as fixed. Okay. Acha, what cost increases directly with the volume? Everyone, I produce more. Everyone, if I produce more, what will happen? If I produce more, obviously my raw material cost will be more. My labor will be working harder. है ना? So can I say at this point of time that fixed cost will be remaining same? Rent you have to pay will remain rent. Indirect expenses, the expenses which are indirect, matlab that is something which we do not pay directly. It has nothing to do with the organization directly. Semi-variable cost. Part of it is variable, part of it is not variable. Variable cost can be stated as something na, which is completely varying with the production. What's going to be the answer? The answer is variable cost. Everyone, if you haven't taken our course yet, then hurry up and take our course right away. Why? Because our courses are available at 80% discount, and for that, download the app right away. If you download our app, you will get 80% discount. Currently 79% is going on the website, and 1% extra if you download the app. Then please download the app, everyone, and get it done. Acha, what is the definition of cost as per the SEMA, Chartered Institute of Management Accounting, London, has given this definition: the quantity of the product or service sold, the measurement of cost in monetary terms, the unit of measurement used to a certain cost in relation to the product or service, or the total amount of expenses incurred by a company. Hanchi, everyone, in terms of SEMA, they gave the definition as it's a unit of measurement in terms of a product or a service altogether. How does batch costing differ from job costing? Batch costing is related to the area. Acha, you must have seen that kids are obsessed with blue and pink color. The girls will always say, I want pink. This blue is for boys. This kind of ideology is there. So many of the organizations, just like Kinder Joy. Kinder Joy does this, everyone. Look at the specific goods that they're providing. Kinder Joy says that certain kind of goods are for men, for boys, and matlab Kinder Joy has blue and pink. Blue is for the boys and pink is for the girls. So they prepare these two different products, and these products are given to the people altogether. है ना? That is batch costing. Job costing is when I said, sir, you will get, sir, what do you want? You said that, ma'am, I want 10,000 chairs. Okay, you are an event management company. Done, everyone? Everyone, what's going to be the answer? Batch costing is considered similar to one job, while job costing focuses on individual jobs. The customization is there. Batch costing is used for large construction, while job is for small. Batch costing divides cost evenly across all units produced, while job costing allocates cost based on specific requirements, and batch costing is suitable for manufacturing industries. The answer in this area is A. Batch costing involves considering a batch of similar products, such as one job is there, and in this area we have individual jobs. Done. Let's go ahead and look at the next question. What is the objective of unit or single unit output? Unit costing is basically when I'm producing something, na? है ना? How do we define unit costing, everyone? Unit costing is basically one particular thing is produced every single day. है ना? If I'm producing one particular thing every single day, what are we going to do in this case? Then the same product is continuously made. Then we don't have a problem to determine the cost of one unit of a single type of product. Second is to allocate costs across the multiple products. Then we have to assess the total production cost of variety of products or to calculate the cost of services provided by a company. You work as per the cost. Determine the cost of a single unit is the answer in this case. Done, everyone? Let's look at the next question. What are multiple or composite costing? Multiple costing means that you are doing multiple types of costing including in it. Okay? When a company prepares only one single product, or let me give an example. Multiple costing can be stated as in terms of automobile industry. We are producing components for a specific batch. There are certain components which are prepared for everyone. They are just being produced, and we have processing as well. Processing is done one level, second level, third level, and then the next level is we assemble all these things together. है ना? When a company produces a single product or when it is involved in distinct stages of production. Next point, when the company wants to know that the cost is incurred on each department when the company produces complex products with a large number of components. The answer is when a company produces complex products with large number of components. So you cannot have one customization. Got the idea, everyone? Next question. What does departmental cost focuses on? Allocating costs across various departments, determining the cost of single unit of a product, or assessing the total production cost of variety of products, or calculating the cost incurred on each department within a company. Everyone, departmental costing. Departmental costing means every costing department has to be treated separately in terms of our working. What's going to be the answer? Departmental costing is having a costing within different department. Department A, Department B, all these things has to be considered. Okay? Hanji, done. Next, what is uniform costing, everyone? Using standardized principles and methods for costing by different companies, allocating only direct cost to operations, processes or products, allocating all costs whether direct or indirect processes, or identifying the cost driving in this area. When we talk about uniform costing can be stated as something which is related to the specific area of using standardized principles. The principles are same for the entire organization, so there is no clash. This is it for the day, everyone. But before I end my session, let me go back to the area.